This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Well, hello, good morning, and welcome everyone to the AgYield War Room. I am, of course, AgYield Marketing Manager, everyone's favorite backup host, and Ben Wigington's long-lost son, Jack Coakley. If you have any questions or comments, please feel free to leave it somewhere where you're watching us, right? You can leave a comment on YouTube. You can leave a comment on Facebook. You can leave a comment on Twitter or X. And we're always taking your questions, comments, concerns at info@agyield.com. Let's shoot it over to Brian with some overnight numbers.
All right, thanks, Jack. Dees corn overnight just down a quarter at 419.5. November beans down a penny and 3/4 at 1029.5, and December Chicago wheat up a half at 520 3/4. Very light volumes for the overnight, kind of lackluster trade. I think everyone's just kind of waiting for the report on Friday.
That's right. And while we're on that subject, Friday we'll be having a bonus show. You'll be getting Dan and the team's here's reactions to the WASDE report at 11:15 Central Time. So be sure to tune in there. Always exciting to see what the guys have to say, or how the numbers change, strategies, ideas, or the thoughts in everyone's heads. Speaking of thoughts in someone's head, Dustin, let's shoot it over to you and see where your head's at.
Yeah, thanks, Jack. Kind of quiet morning to start. We have corn unchanged. Beans are down a little, wheat's up. So I think one of the things to keep in mind is, we're heading toward harvest. We have a fairly dry finish coming, and that could be friendly in some ways, just because it's not the best finish, but it could also be kind of bearish because of the river levels, right? If barge freights rise, we already have fairly wide spreads. I think this is where we've been kind of plagued with this for the last couple of years, but I do think that that's something that could negatively impact spreads if we get into that first notice day timeframe end of November and we're still at fairly low levels. We're a ways away, of course, for the corn contract to get there, but it's something to keep in mind. Anything that hurts demand right now is not going to be welcomed. As far as market action, corn's been incredibly resilient. I think that the market's pricing in a lot of this disease pressure. Highly anecdotal yield results so far have been some of the corn yields not as good as expected in a lot of the areas. Like first few fields we've heard coming out of Iowa, a little bit lower than the growers were anticipating. It'll be we'll have a lot more data, of course, as we keep progressing into harvest. Of course, the worst fields are probably going to come off first with how fast the die down was. Have been hearing better than expected bean yields in the east, though. That's another thing. And again, highly anecdotal, better than expected. Still pretty dry to finish, and I think that story is yet to be told. But that could explain maybe part of the reason why beans have been weak to corn. I know a lot of the focus has been that China has bought 0 new crop beans for, which is highly unusual. Obviously, they're trying to avoid the U.S. market at the moment. And that's probably part of the ratio drop as well too. But I think that surprisingly, the market is probably thinking about, what is the dry impact of beans, and if it wasn't as bad as expected on this first early yield data, that could be also part of the setback. So yeah, we'll see what the rest of the week brings. We have a report on Friday. Bloomberg and Reuters polls should be out today on that. I think the Allendale survey had a little bit less yield for corn and beans than the USDA was projecting, and I'd imagine that's how these are going to come out.
Thanks for that, Dustin. Ben, let's shoot it over to you.
Jack, first, I don't want to take any credit for the magnificent young man you've become. Okay. Just a boring chop market here, around 420 in corn. Beans, call it 1026, 1036. expect the unexpected anytime you have a WASD report. I don't know what that means, but maybe a greater yield reduction than some of the privates are calling for, or no change at all. Certainly, I suppose there could be an adjustment to acres again. There was a lot of scrutiny around depleted FSA staff on the last go around. So, there's things out there that can happen. You don't normally look at a September report nearly with as much scrutiny as the October report. Ultimately, I think we have a high volume of corn coming at us. I don't think anyone is really excited about being long the corn market yet, but it would appear that speculators don't really want to be shorted anymore. So just a quiet trade, let it do what it's going to do, and go from there.
Love to hear it. Thanks for that, Ben. Brian, you got anything to add here?
More of the question than a comment. Dustin was kind of leaning towards it yesterday, just about 26. Talking to a lot of growers, inputs are actually on the increase for next year. You'll have the natural rotations kind of back to beans after heavy corn acres this year, but do you see more guys, with the cost being so high, shift to more beans next year?
Well, I think, that was a question for this year we came into, right? And it didn't happen. Obviously, we got record corn acres, so it went the other way, even with high cost structure. But I've heard, a lot of just concern from banks and lending institutions about this year coming up. So I think there's going to be obviously extra focus if this is the third or even fourth year in a row of losses projected for the vast majority of growers. So that tends me to think that you'd see a cost cutting year where we move towards more beans, especially if the price is right. I think growers just have gotten a lot more confidence that they can grow good corn on corn yields. And that's where a lot of that's been coming. Perhaps this higher subsidy rate for ECO helped justify planting corn this year too. So that might, like Justin's referred to that, when we go to an 80% subsidy next year, for MCO and ECO and SCO, is that going to encourage more corn acres just because you can get insurability up a bit higher? That's one thing. The other is we did have, when you have 97 million acres of corn, you tend to see a big shift back towards beans, right? Just out of natural rotation. So everything should be pointing towards beans anyway. You just think about recency bias. If the current trend that we're having today too continues, which is slightly below expected corn yields and slightly better than expected bean yields, I think the confidence to move from corn on corn over to beans into the rotation probably will be there when the incentives are there too. So this is where I think the spreads could do something really interesting. I mean, if we're talking, let's just say yield numbers from the USDA are off, 188.8 needs to come down to 185. Well, that's still a huge record above, we've never been above 180 before. And this is basically a record number of corn acres on top of that. So what's the system going to have when it comes to storage problems? We've talked about it, like hard to get bagging systems in the West has been the rumor. And if you're just flooded with excess supply, and then you're looking forward to the next year where we have cost structures continuing to rise, that's where D26 corn still needs to go prove a crop through price incentives globally, not just in the U.S., but globally, because we're more competitive with Brazil's currency now. And then we're in an oversupply situation with low river levels today, right, in harvest 2025, presumably that we still have a record yield. Now, if 178 prints or something like that, which I'm not ruling that out either for corn, then spreads could probably, do their thing and narrow and try to incentivize movement just because we're carrying in so few bushels. But 185 and above at this many acres, I think you're going to have a bit of a storage problem personally. And that's where you may get D26 corn actually rises as D25 corn falls. I just wouldn't be surprised to see that happen. I'm not predicting that. It's not like I'm not trying to, say this is absolutely going to happen. I'm just saying the setup is there that it could happen.
Gotcha. Guys, anything else before we move over to Ryland with some livestock thoughts? Ryland. Take it away.
All right. Well, it was kind of a bloodbath here yesterday, and cattle actually saw the first real round of liquidation from likely managed money here with open commitment down 8,200 contracts in the live cattle. So, I mean, obviously it's been kind of a long time coming, and we do kind of got the sense early last week that maybe things were changing a little bit coming out of grilling season, that beef prices were going to be a little bit defensive, and we're just coming into that time frame. Just seasonally, we're a lot more vulnerable. So in general, just seems like we saw just kind of a broad brush liquidation. A little bit more concerning is that feeders, the liquidation we saw, at least commitment was only down 500 contracts, and we did end up limit down. So we are going to trade with expanded limits today of 1075 in the live cattle and 1375 in the feeders. So we've seen some cash trade roll out already, about $5 lower here. So I think the packers trying to really take advantage of the lower price on the board here. So we did see some 238 live trade, 375 to 382 dressed Nebraska and Iowa. So, you know, all the news is just it's going to be a little panic inducing today, whether it holds or not. We're coming up to the 40-day moving average, which is kind of an inflection point, I think, for a lot of the specs. So we'll see if we're able to hold those levels here today on expanded limits. On the hog side of things, did end up higher. Everything looked pretty good on the cash side right now. Cash is almost up $5 this week so far, 106.10. It was up another 227 yesterday. And carcass was a little bit on the weaker side. We did see a $5 loss in bellies, but it seems like this is kind of a cash-led rally right now, and we're just trying to narrow up that discount here on the board.
Love to hear it. Thanks, Ryland. Well, if you like what you're hearing in the war rooms and you want to know what's going on with us, you want to help support the show, give us a like or subscribe. It doesn't cost you anything to do so. It helps us get our show out to a wider audience. It helps us with the YouTube algorithms, and it'll keep you up to speed on everything we're doing here. So thanks to everyone that helps us support the show. We are only, I think, 3 subscribers away from 900 and only 103 subscribers away from 1,000. So I don't know what we're going to do when we get to 1,000, but, you know, we might have a party, you know, live stream a full office party. I think that would be my first pitch. Anyway, we're streaming every day the markets are open on Facebook, X, YouTube Live, 8:15 Central Time. Appreciate everyone for their thoughts and comments today. And Dan will be back tomorrow for more market insights. So thanks again, everyone, and have a good day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.